Hi everyone, how you guys doing? I hope you all are having an amazing trading day. It's Thursday, tomorrow Friday is going to be the last day for you to be able to trade currencies, but remember that with Octa you can also trade digital currencies during the weekends. Welcome to today's session. It's the live trading session with me, Ambrose, and this is hosted by Octa. Now before a lot more people join us in this session, you can go ahead and let me know your name and where you're watching me from in the chat, okay? So go ahead and let me know your name and where you're watching me from in the chat. Steps that we use to open and close orders in real time. That's one of the things that we talk about in this live trading sessions. And obviously, we analyze the market. You'll have questions, so go ahead to answer your questions, and that's what I will be doing today. Okay, so by the end of this session, you should be able to learn exactly how to navigate through the foreign exchange market. Now, if you have any questions in the course of this session, I'll be checking the chat, the live chat. You can always go ahead and type your questions in the live chat. I'll constantly check the live chat to see if you guys have any questions, and I'll answer your questions. Okay, I'll be happy to answer all your questions. Mr. Nathan from Uyo, Akwa Ibom State, welcome to the live session. All right, quick disclaimer. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation are provided as general market commentary and does not constitute investment advice. I'll just give you guys a brief intro about myself. For those of you that don't know me, my name is Ambrose Ebuka, and I have over 5 years of trading experience. I've honed my trading proficiency and contrived various profitable strategies, including swings trading and scalp trading as well. I also analyze majorly gold, GBP JPY, and GBP USD charts with an outstanding accuracy exceeding 85%, and I regularly backtest trading strategies for effectiveness. And this is very important for all level traders, because at the end of the day, right, you want to be able to look at your strategies, backtest, try to see, am I doing better? Is there anything that I need to improve on? There are some bad habits that I may not have noticed, but just because I'm practicing and I'm backtesting, then I'm getting to understand what bad habits I need to drop off, and just try to refine your strategy to work better and better, and also adapt to the evolvement of the market, right? It's a market that constantly evolves. There are new things that are happening every day in the world, and those things would affect the economy, and when it affects the economy, it's going to affect the domestic currency of that country. It could be a good event, it could be a bad event. It comes down to the economy, and if it comes down to the economy, it's also going to come down to the domestic currency. So you always want to be in the know. You always want to create that vacuum for continuous learning. Okay, with Forex and in the Forex market, learning never stops. All right, today's agenda, pretty amazing thing that we're going to do, or things that we're going to do. The first one would be to look at the economic calendar, which I do first before I go over to the chart. And we'll discuss the ZapZone trading strategy, which is my trading strategy. I just focus on zone trading, obviously because I'm better at it compared to any other strategy. So I'll give you guys an intro to that. And the DXY currency, which is the dollar index, right? I'll give you guys an intro to the dollar index. And also we'll look at the correlation with the dollar index and other pairs, right? Of major pairs, because the dollar index just gives you an idea of the strength and weakness of the dollar, right? Basic information, basic definition. So you use that bias or that understanding of the dollar index, which is DXY, to trade major pairs, right? And try to see areas where we can buy and sell. And we'll wrap up with a Q&A session where I take your questions if you guys have any questions, all right? Okay. This session is going to last about 45 minutes. And like I said earlier, if you have any questions, you can always ask your questions in the chat, and I'll periodically check to answer them all. I'll be happy to answer your questions. So looking at the strategy, what does it consist of? What is included in the ZapZone strategy? So there are 4 key and 4 important things that are included in this strategy. And the first one will be understanding market structure. All right. The things that make up market structure obviously the trend. The idea behind understanding market structure is for you to come into the chart or open your chart, and you're able to first see the trend. You're able to perceive the trend. You're able to understand, okay, this is what the market has been doing for this amount of time. It could be the past few days, the past few weeks, but this market structure, or your understanding of market structure, is basically you coming into the market without having to draw any lines yet, just looking at the market, and you're able to say this is a trended market or this is a ranging market. Okay, and one of the beautiful ways you can do that is with the candlestick chart. It's a popularly chart type rather, and it gives you well detailed information on to identify the trend or the consolidation or ranging market. You're able to also see supply and demand zones. This is even before plotting any horizontal line or vertical line or using any tool. All right, you're able to just come in and see the trend. That's what you need to get good at first. When you're good at that, you come into the market. Now you've seen an uptrend, you can start to draw your lines and draw your trend lines and identify some of the zones that you could have missed while focusing on the bigger picture. And the second thing you want to do is to identify key levels, right? That's the next thing. Now you've understood the trend. This is an uptrend or this is a downtrend, right? What are the key levels in this trend? And by key levels, we're talking about areas of support and resistance, areas of break and retest, bounce. These key levels, these areas where the market has reacted more than once, right? When we go to the charts, we're going to be using this step to analyze. So it's very important that you pay attention to the definitions I'm giving you guys here so that you can best understand how the strategy works. Okay. Now, what makes up the key levels? You can use a trend line to identify in a trending market, there are bounces of that trend line. Okay. You use a trend line to identify areas of support, areas of resistance. You can also use the moving average or the Fibonacci too. These are key levels, important levels where the market has reacted more than once. And when you identify these key levels, now everything becomes a bit clear to you. You start to identify your level of defined entry. Okay, you predetermine your entry and also your exit point, because for every trade you look to open, yes, the idea behind opening a trade is to make a profit. That's the primary. There's any trader out there that would say, I'm opening a trade right now and I don't want to make a profit. I don't think so. But if your idea is to make a profit, right? You open a trade and your idea is to make a profit, then you should also know where to exit that trade, right? And you also need to understand that losses are an integral part of trading. It can go both ways. So you protect your capital with proper risk management. And for the profit part, you also need to understand exactly where you want to exit the trade. You don't need to say, well, I'm going to enter here and the amount of money I make would decide when I'll leave the trade. No, you want to predetermine your entry point and your exit point even before opening the trade. Okay, it takes away, it eliminates emotion trading and over trading, and it just makes sure that you're disciplined with your strategy, and over time you get good results. Finally, risk management, that has to do with your risk to reward ratio, your conservative use of lot size, your stop loss and take profit orders. These are the things that would help you stay in the market long enough to place more trades. And if you're in the market long enough to place more trades, chances are that your profit margin would increase, because now you're in the market long enough to place more trade. You're not forcing your entire career on one particular trade that would give you a high chance of risk. No, you're taking it one step at a time. You're keeping your risk management low. That's going to sustain you in the market enough to place more trades and make potential profit. Now, what kind of traders is this strategy suitable for? As you can see, we have all type of traders here: the day traders, the swing traders, the scalpers, and the position traders. Now, the day traders, like to close their positions, or they look to close their positions within the day. The swing traders look to hold positions for weeks, probably up to a month. The scalpers like to get in and get out. Like, they just get in quickly, get out in minutes, and the position traders look to hold positions for months and even years. Now, because this is a zone trading strategy, Whatever time frame you go to, you would find a zone. Whatever time frame you go to, you would find support and you would find resistance. Guaranteed. Whatever time frame you want to go to right now, we can do that when I go to the chart. We would see support and we'll see resistance. Because it's a zone trading strategy, it can work for all type of traders. Okay? All you need to understand is when am I using it and how am I using it? Regardless of your trading style, it's important that if you're going to be trading zones, right, you pay attention to the higher time frames. I understand that some of you guys can be scalpers. Let me just quickly ask you guys that right now. Okay, so if you're a scalper, let me know in the chat. If you're a scalper or if you're a day trader, let me just know your trading style in the chat. Okay. Someone's asking about question. If you have any question, you can always ask in this chat. I'll be happy to answer your question. Okay. If you have any questions, you can ask in the chat. So, yeah, regardless of your trading style, you could be a scalper that likes to get in and get out within minutes. You need to look at the higher time frames because you need to create that awareness that create that awareness that I'm trading a trending market and I'm going to be trading against the markets, right? Or I'm trading a trending market and I'm going to be trading with the market. These are two different things. Trading with the market, trading with the trend, and trading against the trend are two different things. Yes, you can make a profit from both of them. You can make a profit if you trade with the trend. You can make a profit if you trade against the trend. But the awareness would help you prepare properly because now, if you're trading against the trend, you know that that pullback would most likely be temporary. You see a trending market that's been trending for weeks and for months, and then you're trying to trade a pullback. You know that it's going to be temporary, right? You create that awareness. So you're not going to look at scaling a large amount of pips. You just get in and get out. If you're trading with the trend, you know that I need to wait for a pullback and see how the markets react to that pullback and trade continuously to the downside if it's a downtrend. So very important, if you're going to be trading zones, regardless of your trading strategy, it's going to work, but you need to know when to trade it and how to trade it. And I believe that at the end of this live trading session, you'll understand better how to trade with this ZapZone strategy. When do you use it? During volatile sessions. A news session can be volatile, but it's not really ideal to use zone trading strategies during the news. You can use it after the news when the noise has cleared and the market is a bit calm. But during the news, support levels and resistance levels may not stand a chance. Okay, so it wouldn't really be ideal to use it during the news. But you can use it when two sessions are overlapping, like the London and the New York session overlap together at around 2 p.m. Nigerian time, right? And 1 p.m. Nigerian time all the way up to 5 p.m. Nigerian time. So you can always look at that session and see it as, a time where you want to capitalize on market moves, okay? And also utilize the ZapZone trading strategy. Okay. Now we're going to go straight to the live trading session and, look at some of the areas on our charts where we can identify buy or sell opportunity. Now, I see some people in the chat talking about day trader. And I get this answer a lot. That's the interesting thing, guys. Let me tell you guys the interesting thing. When I ask the questions about what style of trading do you use or, what style of trader are you? I get more of scalpers and day traders. And it's quite interesting because at some point, right, you understand that if you play the long business in the market, you're able to scale massive pips and massive profits. Whatever trading style that you choose to use is beautiful, it's amazing. But I feel it's good to look at the long business, right? The long-term business of Forex trading. Okay. And kind of infuse that into your trading and see how it works for you. Blaze says, I'm basically a day trader, but sometimes I scalp. So that's majorly the same thing. It just means that you like the fast-paced type of trading. But that's all right. That's okay. Again, guys, if you have any questions, please do well to ask me your questions in the chat. I'll be happy to answer all your questions. All right. Let's see. Okay. We're gonna start with the dollar index. Guys, give me a second. So we're gonna start with the dollar index, and if you've been following the live trading sessions, you would know that the reason I like to start with the dollar index is because most of the currencies that I trade, right, GBP, USD, GBP, JPY, GBP, USD, Euro, USD, Gold, they are major currencies, and these currencies are paired with the US dollar. All right. So if you don't know, the dollar index, we also call it the XY. It shows us as traders the value of the United States dollar, the US dollar, compared to a group of other currencies. What are these other currencies? We have the euro, which makes up 57% of 57.6% of the dollar index. We have the Japanese yen, which makes up about 13%. The British pound, which makes up about 12%. The Canadian dollar, about 9%. The Swedish krona and the Swiss franc, about 4% and 3%, right? So these are the currencies that the dollar index, that are made up in the dollar index. So the dollar index, you look at the dollar index to get the value compared to these other currencies. Now, if you're going to be trading these currencies, especially euro, which makes up about 58%, it's important that you look at the strength and the weakness of the dollar or the dollar index. You can get that using the DXY. A lot of traders skip analyzing the dollar index, and I don't really understand why, but I think if you're going to be trading Euro USD and GBP USD, it's important that you look at the dollar index. Now, from previous analysis that we've made, because we've been following the dollar index for a while, you would obviously see the first thing that would come into the first thing that you spot when you look at this chart is the identification of levels, key levels, right? So when I talked about key levels, this is what I'm talking about, this area. You can see how the market tends to move like a magnet. We identified this area and you can see the market danced around and came back to find support here. And you know that if it broke through this point and it came down here, then it would have also found support here. The same thing for the resistance. Resistance came back here to test resistance again. And if we go even lower, you see other areas like here. You can see multiple bounces on this minor level again and again. You can also see, if we go to the weekly, you see multiple bounces on the trend line as well. As you guys can see here, multiple bounces. This was the break below the trend line, which if you look at previous times the dollar index broke below this trend line, it wasn't sustained, right? We didn't get a close below this trend line. But now, if you look closely, you can see that, obviously we have one more day, 1 day and 6 hours to see if we can close below this trend. And if we do that, then that will just signify weakness of the dollar, right? If we're able to break and trade, if the dollar index is able to break and trade above this trend line, then obviously we'll start to see some indication of strength for the dollar index. But as long as we close here, we only have 1 day and about 6 hours left for that to happen. If we close here, weakness, okay, shows you that the dollar is weak. And what do? If you're looking at pairs like GBP USD or Euro USD, what you want to do is you want to sell the dollar, right? If the dollar is weak, you sell the dollar, okay? And I'll show you guys that right now. So if you look at, I'll show you guys the correlation. If you look at the dollar index, you can see that we've been bearish, obviously still bearish because, again, like I told you guys, we're still trading below this trend line from the weekly time frame. We're still trading below the 200 period moving average. And usually when the market trades below the 200 period moving average on the higher time frames, makes multiple bounces and can break above, it's usually a downtrend. It usually signifies weakness, right? So currently you can see that the dollar is weak. We've made some pullbacks, but this does not signify strength yet until we break above and trade above this trend line and also above the 200 period moving average, right? Now, let's say you capitalize on this weakness, right? You saw the push, obviously because of the news. You saw the push, this was NFP. You saw the push, you saw the consolidation, and another breakout. Now, obviously, we got the consolidation, we got the breakout of this uh, uh, massive move that was made on the dollar index. We saw the candlestick close bearish. Now, you know that the next target for the dollar index would be down here. Why? Because we came down here to create a low in the past. If you can see that here, we came down here to create a low. Boom, and we're back here for a retest. Now, what do? Remember, on the dollar index, if you're trading Euro USD, GBP USD, when the dollar is weak, what do you do with Euro USD? You buy Euro and you sell the dollar. So I'll just show you guys Euro USD. As you can see, massive move. Dollar made a massive move to the downside. Boom, continues to the downside. Now, if you sold the dollar here, obviously, you'd have to buy Euro to sell the dollar. You'd have capitalized on that to make more profit. You can see the consolidation here. Capitalize on that breakout to the top side. And that would be about approximately 100 pips, right? Same thing for GBP USD. Massive move to the downside. You can see, you guys a minute. Okay, not exactly the same for GBP USD, but Euro USD the same, AUD USD as well. You can see the recoveries on Australian dollar. Now, another important thing I need to point out for you guys, because again, you're not going to blindly just go to the charts and say the dollar is weak, so I want to sell the dollar on GBP USD, Euro USD, gold, AUD USD, and everywhere. Okay. Another thing you want to look at is the base currency. Now, you need to understand what's going on with the pound, what's going on with the pound and what's happening in Britain, right? What's happening with the pound? Is it strong? Is it weak? You need to understand the strength and weakness, not just of the dollar, but also the other currency that you want to trade. Because right now, if you look at Euro USD, you see that the dollar is getting some strength, obviously, from here. You can see the dollar is getting some strength. And what would that mean for Euro USD? To mean that, you know, Euro is going to lose some strength as well. Get weaker as the dollar gets some strength. You can see it go down here. As the dollar gets some strength, Euro goes weaker. But it's not exactly the same for GBP. Okay, so when I say use your understanding of the dollar index to trade major currency pairs, you don't want to blindly do that. You don't also want to blindly trade fundamental analysis and just come to the chart and say, well, NFP was good, so I need to buy everything dollar. No, you also want to look at the other reports from the other currency. All right, you want to look at reports from Britain. You want to look at the interest rates, the inflation rate, the economy, instability or stability as well. That's one of the important things that you want to pay attention to when you're trading these currencies. Even for Euro as well. Okay, it plays so well with Euro, but it's still important that you also look at the reports coming out from the European Central Bank as well. Let me know in the chat if you guys have any questions. Let me know in the chat. Let me know in the chat if you guys have any questions, guys. Okay, so someone wants me to analyze AUD USD. All right, great. So AUD USD is moving kind of tricky right now. Obviously, let's go to the higher time frames first. So this entire week has been more about recovery for the Australian dollar. As you can see, we had the past 3 weeks we are moving down, and this week was all about recovery for the Australian dollar. So we're going to go to the daily time frame. I just needed to check higher to see what was going on with the Australian dollar, because usually when you look at the lower time frames and you don't get much information, then you want to go to the higher time frames, and you want to start from the higher time frames, by the way. So this is what I mean by AUD USD has been moving kind of tricky, because now on the weekly time frame, you can see that yes, we trended downwards, but now we're kind of consolidating, bouncing off at resistance and support. Just trading within this zone at the moment, right? But again, we have a minor level that AUD USD just broke above, and I mean, we only have a day and 4 hours left for this to sustain here. So we want to see, what we want to look out for on AUD USD is if we open up with bullish momentum again on by next week. All right, not much of, I mean, we're not going to see any drive this week on USD, because most economic events would happen next week. I think tomorrow we only have for Canadian dollars, and I don't think we have any economic events for tomorrow on the US dollar. But again, very important that we pay attention to what happens here. If we close above, then we want to see if we continue with bullish momentum. But currently, in the grand scheme of things, if I should say that, AUD USD is still bearish. You can see that we're still trading below the 200 period moving average on the weekly time frame. And currently we're ranging, so this is not a good time to decide if you want to buy or if you want to sell. If I go lower, you'd still see that, you know, there's no clear indication here that we should buy or sell. The market is not giving us any clear pattern on what's exactly to do at the moment. So we're just going to observe AUD USD right about now. Are we taking any trades today? Yes, we are. So I'm going to call out another signal in the Octa Telegram chart, right? I cut out the first one, but we hit SL on that, about 30 pips SL. So, and the market started to move in our direction. But yeah, that happens with trading sometimes. So I'll call out another one, and then we can capitalize on that. Any other questions, guys? Any other questions? So I'd like to talk to you guys quickly about risk management and why it's very important to use proper risk management. So if you don't have this is a guide. You can take a screenshot of this. You can, you know, write it down somewhere, but this is a guide to help you maintain proper risk management while you're trading. Now, the first thing you want to do is to assess your knowledge of the market, right? Get an adequate knowledge of the market, understand the risk before going live. Then whatever strategy it is you learn, you want to try it out. Even this ZapZone strategy I just talked to you guys about, you want to try it out on your demo. And then when you get confident, when you see the results, you can go straight to a live account. Octa has a free demo account that you can use for practice. The link is in the description to create an account and create a demo account. Pretty easy to get started, you know, pretty simple. The steps are very simple. In like 2 minutes, you have your account, right? And you practice, and when you get confident, then you can switch to a live account. You want to understand the impact of leverage. Now, leverage gives you the opportunity to make more profit, right? Leverage gives you the opportunity to buy more units and sell more units of a currency, right? But it's a two-way street. The same way it can give you the possibility of making multiple gains, it can also expose your account to a significant amount of risk. So if you're going to be using leverage, high leverage, like Octa offers up to 1,000, then you want to use a conservative lot size and stop loss, right? Work on your risk appetite. Use a moderate position size, moderate lot size. Use stop loss and take profit to kind of gauge your trading so that you don't over leverage or over risk. Okay. As a matter of fact, I'll tell you guys, if you're going to be using high leverage, the most important tool you need is your stop loss and a conservative lot size. All right. That's going to keep you long enough in the trading business to trade more and potentially make more profit. Choose a moderate risk to reward ratio. What do I mean by that? Now, if you look at risk to reward ratios, like let's say 5% risk for 1% reward, that's not really moderate, right? If you're risking 5% to make 1% reward, that's not moderate at all. At the very least, it should be 1-to-1, 1% risk, 1% rewards. Okay. Use a trailing stop on your trades to protect your profit. Also, I just want to, rewind back on risk to reward. Another inappropriate risk to reward ratio would be something like 1-to-100. Now, is it possible? Yes, it is, but it's not just realistic, right? You don't want to use rewards that are not really, realistic. Use a trailing stop on your trades to protect your profit. A trailing stop basically helps you secure profit while your trade is moving in your direction. So with a trailing stop, it's the same thing as your stop loss. The only difference is when the trade is moving in your direction. Let's say you have a target of 100 pips, right? Stay with me, guys. You have a target of 100 pips and the market has moved 60 pips in your direction. Now, instead of, leaving your trade open, because, the markets can move crazy. The market can rewind or can reverse and go back and go up and do all that. What you can do is to take your stop loss and put it in about 40 pips. And yes, you can do that. When the market is moving in your favor, you can take your stop loss and set it to be into profit so that when the market reverses, yes, it's going to knock you out, but at least you've secured the profit from the place you set your stop loss to your entry point. Okay. You don't just lose the entire trade. All right. Number 9, control your emotions and do not overtrade or revenge trade. All right. I call it the 2 risk to reward rule. And what I mean by that is if I place a trade and I'm profitable, I can place another trade. Okay. If I place a trade and I'm profitable, I can place another trade. Now, if I place that second trade and I'm also profitable, I'm done for the day. If I place a trade and I'm profitable and I place another trade and I'm not profitable, I'm done for the day. Okay. If I place one trade and I'm not profitable and I place another one and I'm not profitable, I'm done for the day. So you can have your own rule that fits into your risk appetite, right? But it's important that these rules are set in place because they keep you disciplined and they ensure that you can show up the next day without thinking about, how am I going to fund again and how am I going to do this and do that. Control your emotions. Do not overtrade or revenge trade, all right? You need to approach the market with clear sight and clear mind. If you're not in a position where you can do that, you can make rash decisions and you may not see some really important detail in the market. Know when to stop after consecutive profits. Now, sometimes we can have a really amazing profitable week. It happens sometimes. And then at the end of the day, we start to feel like we are masters of trading. You can have a week where you don't make any losses in the market, and then the next week you're like, well, since I didn't make any losses last week, I'm going to go all in. I'm going to go full margin this week since I'm the king of trading now. And then what happens? The market humbles you. And then the upper week, you don't even know how to position your mind to trade again because now you've had a profitable week and you've lost all your money and you just funded again. And now your hype is down, your mind is down. You don't have that, that courage that you used to have anymore. So you need to have a strategy in place. It can be a trading plan that tells you when to stop after consecutive profit. Okay. And finally, never risk more than you can afford to lose. It's ideal to risk 2% or less on a single trade. All right. So these are some of the steps and guidelines to help you manage your risk effectively. Again, the link in the description will take you to your App Store or Play Store if you use Android, and you can download the Octa trading app. The Octa trading app offers you a wide range of trading instruments with low spreads, fast execution, and no commissions, zero commissions. We also have a lot of educational resources, 24/7 customer support, and a strong commitment to funds and data security. Now, if you download the Octa trading app and you want to make a deposit, or your trading demo and you're confident that you want to go live, you have this amazing promo code here that you can use to get 100% bonus on your deposit. The promo code is Ambrose E100. All right, Ambrose and then E100. You can open the Octa trading app or visit the official site. It's going to be octaafrica.net. You go to your profile in the promo code section. You type in the promo code Ambrose E100. You can also do this while you're making a deposit. There's an option there for you to type in the promo code and you click on activate. You can make your deposit and then enjoy the bonus that comes with this promo code. It's a 100% bonus that comes with the promo code. Now, while you're making a deposit, you would be shown the amount of volume you need to trade to be able to withdraw your bonus. So it's important that you also pay attention to that so you can understand what volume you need to trade to be able to withdraw your bonus. Let me know in the chat if you guys have any questions. Let me know in the chat if you have any questions. And while you guys do that, I'll just go ahead and summarize. So today we discussed the ZapZone trading strategy, the things that make up the strategy and how suitable it is for traders. And we also applied it to the chart as well. We reviewed the ZapZone strategy on the live chat today on DXY, on GBP USD, and on AUD USD. And if we didn't review your currency, it's okay. You can always type it in the chat and we'll do that in the next live trading session. Make sure you don't miss it. And finally, we talked about trading principles, how you can, some of the guidelines that are very important for traders to be able to manage their risk effectively. Now, what are some of the key takeaways that you can get from this webinar? First, you need to analyze whatever instrument it is, right? If you're going to be trading currencies, digital currencies, commodities, stocks, whatever it is, you need to understand how they behave under various market conditions, under various, volatile times, okay? Because the market could be volatile at some point, and some points they may not be volatile. And the market is not always going to trend. We're going to have ranging moments, we're going to have trending moments. So you need to be able to understand, how does GBP USD react in a ranging market? How does it also react in a trending market? You also want to review your actions and reflect on your decisions to identify what worked well and what can be improved on. So, and you should do this regularly, okay? Because when you're accountable, when you create this sense of accountability as a trader, then it's easy for you to eliminate any bad habits and focus more on what works for you. Keep up with the latest market news and updates. You can do this with the Octa economic calendar. You can also do this with the Octa trading app. The amazing feature there, it's called Space. You can do that with Space as well. Try to get an understanding of what's going on with these pairs and these instruments. And also the market analytics that comes up in the Octa Broker YouTube channel as well. And you can use the educational resources, the webinars, the live trading sessions to enhance your understanding of trading strategies and tools. Again, I'll see if you guys have any questions. Let's see. All right, no questions. All right, guys, it was an amazing session. We value your feedback. You can always let us know how these sessions go. So it's good that you also give us the feedback. It's essential and very important for us to be able to improve our future webinars. Now, this survey is going to take only 1 minute of your time. You can scan the code on your screen, or you can check the description to find out the link to fill out this survey. It was an amazing session. Thank you guys for joining, and I'll see you all next time.